Bitcoin is retreating after the SEC delayed key ETF decisions that were expected on Friday, damping traders' hopes of a long-term recovery. Joining us now to discuss the crypto markets is Fundstrat Global Advisors Head of Digital Asset Strategy, Sean Farrell. Welcome to the show, Sean.
Hey, Jen. Thanks for having me.
Thanks for being here. All right, you have identified three major risks that could potentially halt a rally in the markets. Tell me what these are.
Yeah, I think before getting into that, it's important to back up and understand what we look like right now from a macro picture. I think the story of the past few months has really boiled down to idiosyncratic crypto-specific catalysts lining up with, frankly, some disadvantageous macro conditions. So if you go back to the BlackRock application in June, around mid-June, that actually marked the local bottom for the DXY, the U.S. dollar index, which Bitcoin and other liquidity-sensitive assets trade inversely to pretty closely. Fast forward to the Ripple ruling, we had another, very substantial crypto, particularly in altcoins, but that was also faded shortly thereafter due to similar forces around rates, the dollar, and central banks reeling in liquidity. Now, obviously, a couple weeks ago, we had the huge grayscale ruling, which was expected, and we obviously got a pump. And why we were and still remain tactically optimistic is that there are reasons to expect that the dollar should start rolling over at some point this week. Should start to see some upside resistance in rates. But obviously, should that not transpire, I think it's right to expect Bitcoin to continue to trade in a rather heavy fashion in rates. Go back to the specific risks that we had outlined. One thing to consider is seasonality. Sometimes this is a very it's a little squishy of a concept, right? But it's sometimes can be seen as a self-reinforcing factor to consider. If everyone else thinks that Bitcoin does terribly in September, other market participants will automatically de-risk just in anticipation of that, and it's a self-fulfilling cyclical process. And then the other two risks, specific to crypto, I think a lot of people might be weighing on a lot of traders' minds. One is the Binance risk. Obviously, we saw the sealed motion filed by the SEC last week, which intimates that there is a concurrent DOJ investigation going on. We see that as a very acute risk. Don't think it's actually going. I think actually a lot of it's probably already priced in, but I think that's something that is likely weighing on the incremental buyer here. And then obviously the government still has about 32,000 Bitcoin to unload before the end of the year. So that certainly in a liquid environment, that's going to be absorbed pretty quickly, but could always weigh on prices in the very short term.
Our last guest outlined several different outcomes in the spot Bitcoin ETF saga. Where do you see the decision on spot Bitcoin ETFs landing?
Yeah, we're optimistic. I think a couple months ago we put out a 75% likelihood of approval within this application period. The first official deadline, I think, is in January, so that's probably where the clock our timeline would be capped at, being January. But we're obviously very optimistic. If you look at all the options for the ETF, I think Rick outlined them very nicely. But to just quickly go through them again, there's obviously the possibility that the SEC just goes back, double down, identifies another rationale for denying the spot Bitcoin ETFs. But in that case, they'd probably have just another lawsuit on their hands, and I'm not sure that they have the stomach for that, either from a monetary or from a manpower perspective. Obviously, they could appeal the court's decision within 45 days. That deadline would come up, I think, October 13th or 14th. But again, if you really read the language of the judges that rule in this case, it doesn't leave much open for an appeal. It was actually pretty definitive language, at least from my perspective. Obviously, I'm biased. Then the other two options are, potentially revoke. Rick had mentioned they could just revoke the ETH futures ETF, but I wouldn't. That definitely would not be a face-saving endeavor for the SEC. Because they would look kind of silly for approving that futures ETF. They would essentially be saying that they were wrong, and certainly as a politically charged organization, I don't think they would like to do that. Then the fourth option is just to tip their cap to the judicial system and approve the spot Bitcoin ETF. So, and to us, that seems like the most likely for everyone involved.
I want to turn now to another recent court decision. Last week, a New York court dismissed a proposed class action lawsuit alleging that Uniswap was responsible for causing harm to investors by allowing scam tokens to be issued and traded on the protocol. What does this mean for DeFi, do you think?
Yeah, this was huge and obviously less talked about due to the other huge case victory over the past couple of weeks. But this is great because I think the SEC is basically saying that they have jurisdiction over these software platforms that can make a decision over what is traded on their distributed platform. But the judge in this case is taking a very logical stance and saying that no, this is a neutral playing field for anyone that wants to issue an asset in an ERC-20 standard, and the onus is actually on the issuer of the scam token. They are the perpetrators, not necessarily the Uniswap LPs or Uniswap developers who deploy the smart contract that are at fault. And I think what is particularly important to note of this ruling is that the judge in the case specifically cited how there is a lack of regulation, clear regulatory, clear rules of the road in terms of how this should be regulated, and that the SEC does not actually have the purview to step in here and be the so-called cop on the beat, as they like to call themselves.
Yeah.
And that's been a big issue, right? Is that a lot of people in the crypto industry, myself included, think that the SEC is largely stepping on Congress's toes when it comes to regulating the industry. And obviously our view is that this new technology, this new internet money needs new rules of the road in order to regulate appropriately.
Let's turn now to Bitcoin itself. FS Insight, which is an accessible version of Fundstrat's research, recently tweeted, "We are currently in a seasonally unfavorable period for crypto, a trend that has been fairly consistent since Bitcoin's inception. The last time Bitcoin posted a positive return for September was in 2016. What are your expectations for Bitcoin this month?"
Yeah, obviously it is something that we need to acknowledge and something that we should respect. Right. I think what's unique about this situation is that there are a lot of crypto-specific catalysts that are liable to hit the tape at any moment's notice. So that's obviously something that gives us hesitation of taking risk off. Right. And obviously there are intra-month moves to prepare for and to position around. And so, I think there's a good likelihood that we chop around a bit this month, to be frank. It'll depend a lot, as I mentioned earlier, on the way the dollar moves and how rates, whether they reach a ceiling or not.
Sean, I got to ask you if you think that Bitcoin is on a bull run. At Korea Blockchain Week, former BitMEX CEO Arthur Hayes said that a bull run for Bitcoin started back in March when the three banks collapsed. He said it's going to take 6 to 12 months for the market to react to that. What do you make of these comments?
Yeah, I mean, look, I think this comes down to how we define a bull run, right? Like, right now, if we look at where we are from Jan 1, it's tough to say that that isn't a bullish run for asset prices, for crypto prices. But, so it comes down to how we define bull market. I do generally agree that we have seen the cycle lows and we are into the next cycle. And I generally agree with Arthur in saying that the global tightening cycle has peaked, right? It's particularly on a relative basis. I think, we see the Fed starting to get to the end of their rope. Lots of disinflation domestically, deflation out of Asia. And so I think there's good reason to anticipate, stepping back, looking at things from a cyclical perspective, that we are at the very start of a bull run.
All right, Sean, we are going to have to leave it there. Thanks so much for joining me this morning.
Thanks so much.
That was Fundstrat Global Advisors Head of Digital Asset Strategy, Sean Farrell.